Just when you thought that the going was all fine, the markets did crack a little bit. Actually dipped, to be fair, given how steep the run-up in the markets have been. But, given the fact that we were almost nudging close to that 15,900 level, and then you had 16K in sight for the index, from there we breached the 15,800 mark today, and we've fallen about 100 odd points, both for the Nifty futures as well as the Nifty spot. But that said, the markets, while anecdotally they've always gone strong with long positions into any Fed event, today was not really the case. Remember, you've got the FOMC meet outcome tonight, and all eyes are on whether the Fed is going to continue with its accommodative stance. Well, the dot plot does indicate that any interest rate hike is only going to come by 2023, and the Fed continues to maintain its accommodative and low interest rate stance. But given that both domestically as well as globally inflation has been spiraling up, this is something critical that the markets are going to be eyeing. So that is something that the markets are keenly waiting out for with bated breath as to what the Fed commentary is on the interest rate trajectory, because that perhaps is going to define how the rest of the global central bankers and ours also acts to inflation, especially given the commodity price hike pressures. In fact, talking about the commodity price hike pressures, today you had the commodities actually drag us lower. You had the metal names which were dragging, pick up any metal stock, and that was cracking quite hard. Hindalco fell 3%, Tata Steel was down 3%, JSW Steel roughly around 3%. All the stocks were actually bleeding in the red. China seems to be now clamoring down on commodity prices, and they've categorically said that they're going to be tapping into the national reserves. Now, there are many ways of actually, dissecting this particular news. The fact that this also somewhere indicates as to how much of a pent-up demand there is, or inherent demand for commodities. But in the knee-jerk, or rather in the near term, you did see this knee-jerk reaction come into metal prices. That said, not just metals, there were a lot of key heavyweights as well, which were dragging lower today. So Adani Ports didn't quite see a respite even after the management clarity and coming in yesterday. Both Adani Ports as well as Enterprises fell hard today. There was IndusInd Bank also, which was lower. Reliance too finally has paused, 1.6% lower there as well. There was L&T, Sun Pharma, Ultratech Cement. They were all stocks which were under pressure. Same was the case for the broader end of the market as well, wherein you had a good 134 F&O stocks actually stand to the decline. So in that sense, you had the broader markets underperform even what the benchmarks did. Handful of movers, which one must point out. The oil sensitives, given that Brent is already at $74 to a barrel. You had GAIL ONGC hold out. You also had Tata Power, which looked very good. Remember, power is the only sector which has managed to hold out today. And then, of course, Jubilant Foodworks, after its excellent Q4 performance and same-store sales growth, that is one stock which managed to hold out quite smartly.